much, Daniel, for joining us today. Thanks for joining Virtual Growth Conference. Just wanted to explain a little bit more about what Virtual Growth Conference is. It's essentially a conference for startups to hear about from entrepreneurs and from investors what the trends are and what are some of the challenges and how to overcome it, especially from a success point of view, how to reach success, and some of the real world stories that are out there on how startups have succeeded. So it started this year, especially during COVID-19, where we had a lot of companies sort of not being able to go out, people being stuck at home. So we started this to really educate and help startups succeed. This is supported by a few organizations. I'm just going to run through them quickly. One is HKSSG, of course, Hong Kong Startup Support Group, which has been a great source of information and help for a lot of startups, I hope, as well as Tuss Park, which is Tsinghua University's accelerator here in Hong Kong. Startup Grind Shenzhen also has supported this, as well as Singapore Global Network, which is a organization out of Singapore to help bring friends of Singapore and Singaporeans to know more about Singapore and what's happening in Singapore. Just wanted to give a shout out to them and thank you for their support. Also, thank you very much for Daniel for joining today, and Simon for being a panelist as well. Just wanted to thank you for coming on today to speak a bit about what the new normal could be, especially after COVID-19, and some of the stories that you had from the past with startups as well. So maybe I'll just have Simon quickly introduce himself, and then Daniel, please feel free to introduce yourself after that. Thank you.
Yeah, sure, Benson. I'll make this quick because the focus should be on Daniel instead of myself. So I'm one of the co-founders for the Hong Kong Startup Support Group. So those of you who have joined us, thank you very much for attending this webinar. I really hope that the content that we're discussing will be able to give you guys some value. As I said, I'm the co-founder of the Hong Kong Startup Support Group. I'm also a co-founder of a asset management community called Fund Kernel, and we're doing some very interesting digital asset thing. And I think from my perspective, look, everybody is having some difficult time right now. We're all stuck at home. Well, Hong Kong, things are getting better. Hopefully we'll be able to loosen our noose a little bit now. But it's been a difficult couple of months. I'm sure a lot of people are frustrated, but it's very important that we all stay positive and we also have the right mindset. And that's why it's very important that we have invited Mr. Daniel too to come in and really talk about his experience working in different environments. So with that said, I'm going to throw it over to Daniel, and why don't you introduce yourself to the quorum here.
Thank you, Benson, Simon. Good to join you on the webinar. I know that we will be speaking to an audience of mostly startups and entrepreneurs, and I know I was advertised as the former group CIO of Ping An. That is all well, but I just want to tell you that I do come from your space. I was part of the team and the senior advisor of the first internet company from China to list on NASDAQ, Sina.com in 2000. I took the first online security company and one of the first companies from Asia to list on NASDAQ in 1999 as well, Trend Micro. And I seeded and invested in some of the largest tech companies in the world very early on, including the two largest in China, as well as some in the Silicon Valley. And so with that, I think hopefully what we can talk about today will be practical insights and advice to those who are trying to make sense of the situation today.
Thank you.
Yeah,
Thanks.
well, I mean, making sense. We don't even know what that means anymore, I suppose. Whatever that means, making sense. So Benson, how do you like to start this off?
Yeah, I actually had a question for Daniel, if you don't mind. I really was curious onto your past experience especially with Israeli startups in Israel. And they seem to have unusually high success rate yeah, for that scene, even though the country is landlocked and there's a lot of hostile neighbors around them. I'm curious, what do you think contributed to their success, Israeli startup success, and what do you think we can learn as a Hong Kong startup
Yeah,
entrepreneur?
that's a great question, and you know, it should serve as somewhat of a reference to how entrepreneurs in Asia can uh, really review, reset, and go forth in terms of post-COVID-19. I do spend quite a bit of time in Israel. I serve as venture partner of Pitango Venture Capital, the largest VC firm in Israel. I also mentor some of their startups there. In private, I think I've shared with you too that the most important characteristics of Israeli startups, specifically the founders and co-founders and the entrepreneurs, are they all came out of IDF, which is the Israel Defense Force. That is a compulsory program where all high school graduates, boys or girls, must serve 3 years in the IDF. The best of the best go into 8200, which is the elite intelligence force. There, they tackle problems which are vastly different from the analog days, which is to say, they really put together some of the most advanced digital value propositions in defending Israel. So whether it's cybersecurity, whether it's solutions for warfare, and so forth. So when these young boys and girls are discharged from the military, they go on to universities, they come out, and they all have a strong streak of entrepreneurism. And when they decide to start a company, they've already learned how to run a team, a plan, and a disciplined approach to delivery. And so with that, you know, they come fundamentally sound. They know the problems they hope to solve, and they know who's who in the network. And so they're always very quick to build the best teams around them. That in general is very, very much different from the rest of the world. Not to say pound for pound, we don't see good engineers in Silicon Valley and Asia and so forth, but you need the total makeup to make it work. And so their likelihood of success is far better. And plus, funding these days are in abundance. And so that is never the question. It's always finding the right team.
I think that's a very interesting point, because the funny thing about, you know, we're now at a time where there's such negativity, and if you go on CNN, go on any mass media news, it seems like it's the end of the world, right? Where in fact, yeah, I mean, look, it's bad, but you know, when you compare to someone who lives in a constantly hostile environment where bombs are you know, bomb threat. I had a chance to work at Tel Aviv when I first started in fintech. I worked for an Israeli fintech company, and for 4 years, and I go to Tel Aviv all the time. And there are times when I hear bomb sirens, and that's the constant environment that they live in. And contrast that to today, yeah, you know, it's a terrible disease and all that, but a lot of us are not under constant threat of death and war. Can you comment, Daniel, that pressure of life and death when you're in the military, and that urgency, that sense of urgency, how does that contribute to the mindset of creating an entrepreneur in that sense?
Well, you know, when you grow up in that type of environment, and then when you serve in the military in Israel, and then having been given responsibilities while you're serving, the training, the exposure, and the responsibilities are vastly different from an 18-year-old from a U.S. high school or from an Asian high school graduate. You know, so right off the bat, you are at an advantage in terms of learning real skill sets, understanding real world problems. What I will say is this. Interesting enough, a couple of days ago, I was on another webinar with Pitango, and I was asked to address all Israeli startups. I'm often reminded by my friends in Israel that they are an impatient people. And I try to make them understand that given my background and having my last stint at Ping An, a company of 1.7 million people, employees, that impatience does not equal speed. And it certainly does not equal time to the market. And so when you are thinking today as an entrepreneur, as a startup founder and a leader, you have to understand that being impatient does not qualify for anything. It is understanding your core model. It is understanding your runway. It is understanding your team. It's understanding your customers that will allow you to deliver with speed.
Yeah. Yeah, and I think that I think that's a very good point because you know whenever an entrepreneur start a business, they have visions, and oftentimes this vision is an endpoint vision of how successful they're going to be. I'm going to have $1 million. I'm going to have 1 million people downloading my apps, and it's going to be, I'm going to have 300,000 followers, and I'll be able to go on stage and talk about how good I am wearing black turtleneck shirt and all that. But they never envision the journey. The journey part of it, it's the difficult aspects of it, the constant grueling going back and forth and trying things out. They never envision that. And the patient aspects of it is, become very important. Patient is not about time to market, but it's all about getting things right, getting things done right. And it's trial and error. And that's a very good point. That's a very good point. So from your perspective, Daniel, if you are to if I want to put you on the spot and really compare the Israeli environment versus anywhere in Asia, because you've been around all the different countries and all that, where would you think is the most similar? Where in Asia, which startup market do you think has the most similarity? And the second question, I guess, is what does Hong Kong startup has to do to I wouldn't say match it, but what are some of the positives that the Hong Kong startup should adopt in order to become that level of success?
I think if there is any analogy I can put to say in this part of the world that is similar to an Israeli startup environment, I would have to say China now. Maybe not so 3-5 years ago, but simply because the landscape has become so competitive. While we know and identify the key players, including the top tech giants, but the ecosystem is so vast now and the problems so myriad that the speed, that the talent and the model means so much more in China, maybe more than Israel. And so if you have a chance to visit Alibaba or Tencent before they roll out a product, you will see that they are in battle mode. You will see that it's a nonstop work retinue. And it really is the survival of the fittest in China today. Now, I'm just generalizing there. You really have to live through it to understand what I'm saying, because even at Ping An, I said it's a big ship. But to implement and to execute at the timeline that the leadership wants, it is something that you've probably never gone through before. I've always said, when I was at Ping An, my schedule was 50% of my time was in China, 50% was on the road, overseeing our venture arm as well as all of our strategic research projects, as well as a Goodwill ambassador. I had 3 phones next to me and a pad all the time, and for various reasons. Now, with Hong Kong entrepreneurs, it's a little bit different. And I will say Hong Kong is at a disadvantage simply because the market is too small. You have to look up north. And in order to be exposed to that market size, in order to understand with that scale, it is very difficult to succeed unless you have an absolutely advantageous technology. That's number one. Number two is that Hong Kong students, much like the rest of Asia, when you're in high school and college, you're kind of risk averse. Your overarching mission is to do well as in exams and get to the best schools. However, at school, they never teach you to understand what risk exposure is, risk management is, vision is, and all of these things. And so failing fast, failing big, failing small, these are vastly different connotations and notions for a Hong Kong entrepreneur vis-a-vis a Chinese entrepreneur, or a China entrepreneur, I should say. So, I mean, I'm generalizing, but in a nutshell, this is what we see all the time.
Yeah, I think that's a very key comment, because if we look at one of the more successful startup in fintech, in my area, fintech, and we're talking about Simon Leung's WeLend. They use Hong Kong really as a test bed of their technology, and once Hong Kong has served its purpose as to turn it into a mature technology, they immediately expanded up north, and that's where they just simply exploded into this massive unicorn today. So you're absolutely right, Daniel. I think that's a very important point.
Well, I will say, just like even if you are not a fintech entrepreneur, just think about this. If you are a football or soccer player, or if you're a basketball player, at some point in time, if you're talented, you want to play in the best league, all right? Whether it's the NBA or the Premier League. Now, if you are always playing in a small pitch or a market, you'll never be able to gauge yourself against the best. So if it's China, then you are faced with two daunting challenges, or two daunting advantages. One, market size. Two, are you able to go toe-to-toe with the best in your sector all the time, every time? And so these are questions that you need to ask.
Right. In terms of having startups from Hong Kong, do you see that as a natural advantage where Hong Kong startups can bridge the gap between East and West, or do you see that as something that is perceived but not really there?
I think the East and West thing is kind of overblown until now. What do I mean? From the trade war on to COVID-19, I've said this since 2015 in Silicon Valley speech, and that is, at that point in time, I felt that bifurcation was coming. The two countries, both giants and large economies, were on separate agendas. So if you're sitting in Hong Kong, where you kind of in the past enjoyed the best of two worlds, you now have to be cognizant of those two worlds. And what do I mean? I mean, in terms of the decoupling, potential decoupling of economies, and of course, to a certain extent, of the supply chains, technology is not far behind. So you will see bifurcation to specifically strategic areas. Now, whether it's AI, blockchain, cybersecurity, and even digital currency, you will see different standards. You will see different protocols. You will see different interoperability concerns. But much more than that, I think, is that as fast as China is moving on its national objectives, and it will spill over to Hong Kong, Hong Kong entrepreneurs must be cognizant of what's happening in China. For instance, just last week, two things of immense importance happened. One is the blockchain-based service network, BSN. And that is a national initiative really led by the government to tie all 100 tier 1, tier 2 cities onto the platform. Large companies, SOEs, non-SOEs, SMEs at some point, and individuals will all be tied to that platform. The second thing is the digital currency pilot programs ongoing in China in the 4 cities. At some point, that digital currency will be filtered into retail. And if you are a customer-facing company based in Hong Kong, or if you deal on a B2B model, you have to be cognizant of the fact that at some point, transactions and payments will be settled in digital currency. They will be tethered to the blockchain platform, like it or not. And you will be subjugated to the social credit rating system. And so all of these things, if you cannot just be looking at it from a very narrow perspective, you've got to understand the forest that you're in and the tree that you're under. And so all of these things, and your investors will want to know. And how you are able to articulate your vision and the mission is really, in a way, you're really the path for your company not only to survive but to succeed.
Right.
Yeah. Yeah. So Daniel, I'm going to pull us back a little bit on topic a little bit. I mean, the panel is about innovation during the time of COVID-19. Now, you know, I think the bottom line of COVID-19 is our experience for the past few months is that it exposes us to how uncontrolled, how not in control we are in terms of our lives. And you know, as an entrepreneur, we always believe that, you know, the cliche is that, you know, look, work hard and just focus and just, you know, put your head on the fire and then you'll succeed. But the reality of world is that there's a lot of things we can't control. As much as we want to work hard today, we're stuck. Right? We can't meet. Customers are not responding. You know, a lot of the nice to have projects lower their priorities. So we're not in control. And when we're not in control, innovation tends to stagnate. And I think we could draw I like to draw a parallel between your experience at Ping An, because Ping An is a massive organization, right? It's a massive organization. And when an organization becomes a certain size, it becomes, like it or not, a bit bureaucratic. And bureaucratic operations, they tend to resist innovation. And I really like to pick your brain in terms of when you were at Ping An as a chief innovation officer, how do you navigate around those bureaucrats that you are not in control, and how are you able to sort of operate within an environment where a lot of moving pieces are not within your ability to control? Because I think we could draw a lot of parallel between that environment and where we are today, where everything is not in our control.
Well, I think let me just say this before I respond to your question. Let me just let's just step back a little bit and give some context to all your viewers, and that is for Asia. If you revisit 1997, the financial crisis, it really started in Thailand as a currency collapsed, and it affected certain East Asian countries and Southeast Asian countries. The totality of that devastation was really just in the region. The rest of the world was insulated. And that was the extent of it, even though it inflicted great pain. You fast forward to 2008 and the great financial collapse. It started with subprime. It started with the banking system. It became a hot potato for the Fed in terms of bailing out the banking system before it inflicted great pain to the world's financial system. And it spilled over somewhat to the global economy. And that was the extent of that, even though that was big news back then. Looking at today, all of the two things that I talked about, those two catastrophic events, did not prepare us for COVID-19. So let me give you some facts, just so you know what's happening, because we read about it, but you want to contextualize this. The 20 largest countries by GDP in the world, which accounts for 80% of the GDP in the world. Today, we are observing social distancing, practicing quarantine protocols, partial or full lockdowns, closure of non-essential retail, mass unemployment. So what happened as a health scare now is a health pandemic has decimated the global economy, and because of that, it has collapsed the global financial markets. Along the way, millions of people are laid off and unemployed, struggling to make ends meet. So in 2008, the digital platforms disrupted value pools and value chains. Two companies that resonate and still survived, Uber and Airbnb. But what happened to them in COVID-19? It wasn't the technology. It was the demand was gone. So both these companies are struggling with revenue now, simply because of lockdowns, closures, shelter-at-home policies. So what I see going forward is this, post-COVID-19, because it's already kind of formulating, is that we shall see digital ecosystems, not platforms, disrupt the economics of the world going forward. And not only that, how we serve our customers, how we reconfigure supply chains across all industries, traditional or non-traditional. And digital is going to be the backbone. In a way, I feel that this is going to be a digital revolution for the good. Now, about my Ping An days and how it applies to the situation here. Now, companies large and small, let me give you an idea of how large Ping An is, and you may be a small and nimble startup. Ping An today has close to about 1.7 million employees. It's number 7 on the Fortune 2000. It has annual revenue of about 160 billion, AUM of about 1.2 trillion, and it is by far the largest insurance company value in terms of market cap and so forth, any measure. It's the largest non-SOE in China. Even today, as we speak on this webinar, the leadership is looking at Ping An is looking day by day during COVID-19, as you should, and that is end to end. What is your business model? 2, what is my cash flow? When I say cash flow, it is the money in your bank account, nothing to do with your Excel spreadsheet. All right? In the traditional sense of receivables, those don't count. The third piece is you have to look at your customer base. And that is, if you're customer facing retail, then you have to understand that demand is gone. How do you survive, and really how do you define runway? If you are a B2B business, then you have to understand if you're dealing with mostly with SMEs or SMBs, that demand is drying up and the churn rate is going to be very, very high. And so with that, you have to quickly pivot and understand what your customer acquisition cost payback model should be in order to extend that runway, and survival is the #1 option right now. If you're not talking about survival, then we're not talking about you going forward. And so the second thing I always strive for entrepreneurs to understand is, in the good old days when everything was nice and easy, when money was readily available, trying to solve a problem that was nice to solve is one thing. But today we're looking at problems that must be solved. And so are you on that plane? If you're not on that plane, you're probably going to be marginalized. Simply because even if when the economy rebounds, we are not going to see spending at the level that we used to see until a vaccine is in sight. Even if a vaccine is in sight, spending is not going to come back at any time soon. I will say this, even the Fortune 200 companies, when we talk about corporate profits, it's going to be at the mean level, nothing like before. You think about this, credit is even cheaper than equities. And if you can get it. So if you're a startup today, or if you're a large corporation like Ping An, going forward, everybody's going to be tagged with a compliance cost due to the virus, like it or not. And is that something you can absorb? So I'll just stop right there. But these are all things that entrepreneurs have to think through.
Right. Thank you for that, Daniel. That's really insightful for sure. I'm going to open it up to the floor, and guys, feel free to ask questions in the Q&A function in Zoom. Right now, we have one question from Daniel. Daniel is asking, great sharing, thank you very much. He has 2 questions. Maybe I'll just put the first question first. Today, Ping An is one of the best examples of successful corporate innovation with companies such as OneConnect, Good Doctor incubated internally. Do you see that in this new environment, companies will focus on corporate innovation a lot more than before, not only as incubating tech internally, but also bringing in external tech to their ecosystem?
Yeah, I think that's a great question. I think not too many people know this, because I actually participated in all these companies early on and during their incubation, and that is there was a critical reason why Ping An incubated, whether it was Lufax, OneConnect, Good Doctor, and so forth. And that is, when I joined Ping An, we quickly became cognizant of the fact that we were no longer competing against traditional financial players, including ICBC or China Life. Not to disparage them, but simply because we were so far ahead. But we quickly found out that we had disruptors coming into our industries, the large tech companies. So when we talk about customers in Ping An's mindset, it is not so much how many customers you have. In the digital parlance, it is about, do you own that relationship? If you don't own that relationship, then you will never be able to really formulate a holistic risk model attached to that customer. And this is where the large tech companies and data companies have an advantage. And this is why Ping An felt that to our core and relevant to our core business, let's start incubating companies that made sense. So Lufax was online trading, online lending, still closely related to financial services, but digital. 2, OneConnect, cloud-based platform that was able to engage with banking, non-banking lenders, insurance company offering a suite of Ping An in-house technology solutions. You had Good Doctor that was created out of Ping An Health Insurance, understanding that China's health insurance was at an inflection point due to the aging demographics and chronic disease situation. And so with that, we felt that we could create One Doctor online healthcare to complement both Ping An's internal health insurance, but also complement the government's national strategy. So having said that, there was a sound fundamental reason why we went out to do all those companies at that particular time. Now going forward, so it's different strokes for different folks. It doesn't mean it'll work for other companies. Ping An had the balance sheet, Ping An had the talent, and Ping An had the vision to do it. I can't say the same for other companies, but at the same time, the challenge for all of these companies, and the market is asking on each and every quarterly call, is if you cut your umbilical cord from Ping An, can you survive on your own? And this is why the question is posed by analysts each and every quarter, and it's a legitimate question. It is a survival of the fittest.
Right. Thank you. There's a second part to this question, which I also find quite interesting. And then maybe I'll modify it a little bit. How to make Israeli companies, and I think Hong Kong companies, China market entry successful?
How do you make Israeli companies?
And Hong Kong companies, China market entry successful?
I answered the first part of that second question on my webinar the other day. That is, if you're an Israeli company and you already have a presence in China, post COVID-19, there are a couple things that you must do, or you should be doing right now. Macro, you should be understanding what are some of the government policies relevant to post COVID-19, and are they related to your industry? 2, how did your partners or your customers fare during COVID-19? 3, I think it's important to note that will your sector be a preferred fast-track industry by the government's regulatory measures post-COVID-19? I think all of these things you have to understand. And if you are not part of the preferred sector, how will your industry fare going forward in terms of both funding, in terms of customer demand, and in terms of your digital value propositions in a vast and large market like China? Now, the same goes for your Hong Kong entrepreneurs and your startups as well. Now, for those who are not in China, but are thinking of going to China, you have to understand that it is no longer the China of 5 years ago or 3 years ago. 1, funding. You cannot compete with China for funding. There's just too much money, both in the public and private sectors. 2, talents. Beginning in 2015, China graduates more STEM majors or engineers than the United States. There are 9 million college graduates in China this year. 3, national policies to protect certain sectors. 4, the market size. So these are things that whether you're a Hong Kong and Israel companies, these are things you have to be cognizant of. So where do you play? You have to understand the technology and the problem that you solve. Now, if you understand that properly, then you will know at least how to pursue your approach for China, whether it's through integration, whether it's through licensing, whether it's through absolute buyout, and so forth. I think each opportunity is different from the other. But trying to mail it in from Israel or Hong Kong will not work. And trying to set up an office is probably the second best option. But being there full time, really, given the market size, the different demands and opportunities as well as challenges. Really, it truly, for some sectors, it's region to region, tier one city to tier one city. And just to give you an idea, it was since the inception for Ping An, the model was always attack tier one cities first. And this is why, whether it's life insurance or P&C insurance, Ping An owns tier one cities. And whereas others have tried to kind of compete with Ping An, trying to go through tier two, tier three, very different value propositions. It takes a different set of resources and talents to do that.
Right. I just wanted to also follow up with another question I think is a bit related to this. It's an anonymous attendee. So, hi, Daniel, good hearing from you. I wonder how you see businesses going digital, and they haven't been able to generate much profits. So is there anything to do with the business model or the maturity of the industry at the moment?
Well, I'll just say, you know, it was nice to talk about digital 3, 4, 5 years ago as companies were thinking about it or making a transformation. Today, digital is a must. And post-PC era is long overdue. And so we're talking about mobile and digital. That's a given. But I've always said this in public as well, that technology is never the end game. I've said this sometimes very in a cruel, maybe, comment about some of the hot online insurance and financial services companies that were IPOing out of Hong Kong 2-3 years ago, and they really fell to the wayside simply because technology in an online platform does not guarantee success. Everybody is tethered to that digital highway, so to speak. It is your value proposition. How much do you understand your customers? If you are in insurance, if you are in financial services, and if you are in commerce, if you do not understand your customers, then you will have problem underwriting that product. And if you don't know how to underwrite that product, then you are blind to risk management. And so this is why you see companies, online insurance, online financial services, just taking loss after loss, quarter after quarter, simply because they have no idea who their customers are. They're going through brokers to acquire customers. They're blind to who their customer base is. And this is what I see as an investor all the time. I cannot tell them enough that you have no idea of what you're doing. And this happens in Hong Kong. It happens all over the world. And this is why you see companies just dropping out. Now, at the same time, the customers you're acquiring from, those platforms are learning everything from you. They know exactly who you acquire, why you're acquiring them, and the product that you supposedly underwrote for them. Now, and so this is the world that we are operating in. And if you're not part of that data flywheel, then you're not part of the game. And so I speak also about the digital banks that are coming up in Hong Kong and Singapore. Really, I don't envy them at all, because what is your value proposition at the end of the day at those margins? You have to understand that funding, while it was good and available, is wonderful. But when there is a credit crunch, you've got to be earning revenue higher than your cost of capital. Or otherwise, you have no runway. You have no runway. Why do you think a company like Airbnb just went out and floated 2 bonds for $2 billion US? Simply because they couldn't get equity. All right, so they had to go to the debt side. Airbnb can do this simply because they already have scale. But other startups, they just don't have the luxury of even thinking about that. Whereas successful tech companies like an Alibaba or a Tencent, given their multiples, they can go out and float bonds and get free money. And so if you think about this, this is a very, very unequal world. Unfair, if you may say, but you got to get to that space before you can deal in these things. Otherwise, you're out of the game. And so it really doesn't matter what business you're in. I just want to make the impression that tech is never the end game. It is how well do you know your customers, because if you build, will they come?
That's a very good answer. Thank you so much, Daniel. Yeah, keep focusing on the customer, I think, is really, really important for all of us. There's also a question here along the lines of internal company issues. Um, so it's a question from Stephen. Thank you, Daniel. With the global economic outlook bleak, what key messages should SMB leaders convey to their staff in order to get the best performance out of them while helping them through this time of uncertainty, given that people's jobs may not be secure?
Yeah, I think, if you're a leader or if you are a CEO or a CFO with an SME or an SMB, realistically, you've got to be very transparent about what you're doing. I talked earlier about end-to-end review of your business and your business model. I talked about customer acquisition payback model. But there's one thing that touches on the morale of a company, and that is if you really have to do personnel cuts. Now, this is really housekeeping, but it's very, very important. You've got to understand your business and your runway and the realistic projections going forward. And if you really have to make cuts, they have to be well managed, they have to be deep, they have to be one time only. You do not want to do multiple rounds. All right? And it has to make sense. So all of your employees understand. Those who survived the cut understand going forward, this is our mission. The second thing is, I think entrepreneurs and CEOs have to understand is that consumer demand, whether you're customer facing or you are in a B2B business, that consumer demand will not be coming back as fast as you think, even with a vaccine in sight. Simply because the staggering amount of private wealth that has been wiped out in the market is not coming back any soon. We have more equity issuance to cover up those holes, but they are just putting countries and economies in a survival mode. We are not even talking productivity. We are not even talking productivity. And so we have to be realistic about that. And so if you're an SME or SMB, then the key thing is, again, that if you are qualified for a government stimulus package or for a bailout plan, that's fine. But governments don't do multiple rounds of that. They can't keep on printing money. The one thing I have to impress upon your viewers is that central banks can print money, but they cannot print a functional economy. All right? That is upon government policies and entrepreneurs alike, whether you run a large company or a small SMB, for us to innovate out of this mess. And this really takes into account how well do you know your business? Do you have the right business model? Do you have the right talents going forward to help you run this and to implement this? So this is what I will say, because your SMB viewers are in different sectors. But if you're in a traditional business, then you will have a lot of soul searching and climbing to do. Because if you are not in a digital platform today, you've got to be on one pretty soon, or else you're going to be hurting for a long time.
Right. So as part of that, I guess a follow-up, you're saying that the new normal is definitely more along the digital path, and you're saying that we should focus on a more customer-oriented approach for that digital path. Do you see that there could be, how do you see like traditional businesses being able to adopt and adjust right now? What steps should they take immediately?
So you remember one of my earlier comments was in 2008, we saw digital platforms disrupting the value pool and the value chains. And then I said, COVID-19, post-COVID-19, we will see digital ecosystems. So my philosophy all over, from when I started very young as a professional to my Ping An days, especially at the group level, running large outfits, was, do I know our risk exposure real time? So you think about the size of Ping An's businesses: insurance, revenue over 120 billion, banking, asset management, investments. You're running a global 20 company with a revenue of this size, with an employee base, with literally hundreds of lines of business. As a group CEO, or a CFO, can you tell me what is your risk exposure right now? Not too many people can. So if you're an SME and SMB, the same thing. Do I know what my risk exposure is? If you don't, you shouldn't be running the business. Now, the reason why I say this is, to your point earlier, is about businesses going forward. What should they do is, you have to engage with the right partners to be able to really access and aggregate data points through analytics, understand real time what is happening, and to make the right connections and right decisions. Otherwise, you're going to be in the blind. And this is why you see strange bedfellows forming, coming together as an ecosystem, understanding together maybe they can patch together a holistic risk model. Understanding consumers, understanding businesses, understanding sectors. And that is the way the world is going today. Think about this. I just said this earlier. In the beginning of COVID-19 in Wuhan, a population of 11 million, total lockdown. How did they get by? How did they survive? If not for online food and online food delivery services, online grocery delivery services, that city would have been starved. And so you think about the power of technology and all of these services coming together online, including payments. This is how we take it for granted today. And this is why I say going forward, post-COVID-19, we will see the biggest explosion of digital transformation through ecosystems. And really the focus will be on essential goods, will be on absolute simplified lifestyles, because people understand that going forward, there could be a resurgence of the virus. And so we could be in a lockdown or closure mood once more. But at that point in time, with the right technology and the right services in place, hopefully it'll be better than what we're experiencing today. So in a nutshell, that would be my answer.
Sure. Thank you very much, Daniel. I think wrapping up, just wanted to ask a story that you could perhaps share as to inspire the audience on maybe a startup that you've seen have a challenge face them, and how they managed to overcome that and where they are today.
Wow, there's so many. You can people always like to point to the successful ones, but they're successful for a reason, right? So you talk about maybe Jack Ma in his early days, being despondent and having failed many times, finally putting together the right team, implementing his vision, and then building on the success of his earlier online commerce platform to create what is Alipay, and then Alipay to Ant Financial. All this is, it's a natural gravitation of business and models, but that is one. You can talk about Tencent pivoting from I don't know what to do to acquiring WeChat, to building on top of WeChat, to building on what is today Tencent, a multifaceted platform, including the largest gaming platform in the world, and then creating subsidiaries that support the platform. So that you can talk about Ping An, which started as a P&C insurer and almost went bankrupt because the fleets that Ping An insured sunk in the Taiwan Strait, and Ping An wasn't able to pay for it. And then they quickly pivoted to life insurance, where the margin was high. And then based on that, and China was really was booming and riding that wave of fast growth. And then building on top of that through premiums, through asset management, and then banking, and then today to what is a almost tech-based financial services group. You can talk about that. And so all of these are truly success stories, but there are so many other smaller companies today that are just as valuable, if not more, small tech-based companies. If you look at the company that SoftBank acquired in England called ARM, which makes some of the most advanced AI chips. You look at a Taiwan-based company like TSMC, which is the tech bellwether. They are the ground zero of the tech supply chain. They make every chip for every device on the planet. Apple is their largest customer, with Huawei at number 2. You talk about these companies in the tough times, making the right choices. Just last week, Alibaba made an announcement to commit $28 billion over 3 years to build out their Ali Cloud to compete outside of China against the best in the world. So that's Alibaba. Google, on the other hand, said they're cutting back 50% of their marketing spend, hiring freeze. You talk about TSMC for the next fiscal year, allocating $3.6 billion US building out their 3 nanometer chip platform, and then on top of that, capex of $16 billion for this year. This is unheard of in a downturn. And so, and then Apple, knowing that the handset sales or the smartphone sales are sluggish, decided to make the biggest geographical expansion in 10 years, expanding to 20 markets in Middle East and Africa. And so that gives them an incredible geographical footprint. So these are all these tough decisions that you CEOs have to make.
Right. Thank you so much, Daniel. I was just actually also wondering, is there a story of a small, scrappy Israeli startup that we might not have heard of that we should keep on our radar right now and watch them?
Wow, there are so many, but I will say this, given the explosion of internet usage during the lockdown and closures of COVID-19, all of these companies are finding that there is that their bandwidth and their usage have been maximized. And so going forward, whether it's cloud or network, that will be a premium sector to look at. And there is one company, it has something to do with the company, the firm I'm involved with, Pitango, and it's called DriveNets. DriveNets is going to be a software-based company that looks at cloud and networking, and the entrepreneurs are serial entrepreneurs and some of the biggest names in the industry. They're young, but they've built billion-dollar companies, sold billion-dollar companies, and they come from very, very distinguished backgrounds. So DriveNets is one company I would keep my eye on.
Sure. Thank you so much, Daniel. Yeah, I just wanted to thank you again, Daniel, for joining. I didn't want to take too much of your time as well. Thank you for coming and spending 1 hour with us and explaining things with the startups. Is there any one last word of advice you'd like to give the startups
I would say that as bad as things may feel and look, because I will say that COVID-19 is something that I've never faced before. At my age, I've gone through many, many challenges. I would say is this: treat this experience as a once-in-a-lifetime learning experience. Do not panic. Try to be as cerebral and as clear in your thought process. Understand the business you're in, and be quick to make the right decisions in terms of, I don't want to say pivoting your business. Always look at the core of your business and not at the fringes, because the core is what sustains you. In terms of revenue, understand that you have to be driving revenue higher than the cost of capital, or else it'll be a losing proposition. If you understand those things, you have a better chance of not only surviving, but also prospering after COVID-19.
Sure. Thank you so much, Daniel.
All right, my pleasure.
No worries. Also, just take note, guys, that this webinar will be available on YouTube. You'll be able to view it in a few days. I'll share the link in Eventbrite, so you'll be able to get the video link there. And also next week, there'll be another webinar on Tuesday as well. Thank you very much again, guys. Thank you so much, Daniel. Appreciate it. And we'll catch up again. Thank you. Bye.